Well, hey there, everyone. Happy Wednesday, July 1st, 2026. Welcome to Chart This with Dave Keller. I'm your host, Dave Keller. We are keeping it nice and cool here in the Pacific Northwest, highs in the mid 60s. Hope you guys are all staying comfortable and well wherever you're at. Happy Canada Day to my Canadian friends. Canada has felt like a second home for us in the last year as we've gone up there for an amazing vacation in BC and Alberta. Our daughter, accepted an invite to the University of British Columbia, where she'll start attending in the fall. So we're planning to head up to Vancouver very often from our home outside of Seattle. So Canada Day feeling more and more important to my family. So happy Canada Day to all of you. What an awesome holiday. Also, it's match day for my American friends. U.S. men's national team playing today. There's been some upsets so far and a number of teams being challenged quite a bit here. So I'm hoping our U.S. team can have some success today. With all of that in mind, kind of a rough day for equities, I would say, generally, right? I mean, after a really good start to the week, today sort of finished, opened weak, midday pretty strong, and then just whimpered into the close. And this is one of those times, and I often sort of use the metaphor of a football game or something where it's just not going well, and the team just needs to get off the field. Like the ref just needs to blow the whistle and call this one. I feel like as the day went on, it just kind of got worse and worse in the afternoon. And if the markets closed at 5 p.m. Eastern instead of 4 p.m. Eastern, it would have gone down even a little further. With that in mind, though, plenty of things still doing well. Meta gapping higher as they boldly announced they're getting into the whole AI cloud thing, like all the other Mag 7 names, and see if they can challenge Amazon and Microsoft and Alphabet for dominance of that space. With that in mind, let's look at some charts together, shall we? As always, the format of the show is we're going to talk about our market recap. We will look at the heat map and see what happened today at the stock and sector level. I've got some charts that I've hand selected to review with all of you to highlight some of the key themes I think are important to observe today. By the way, we're live streaming on Facebook, LinkedIn, YouTube, and X. If you're tuning in live, welcome. Thanks for being a part of the live show. Please use the comment section on any of those platforms as we go. I'm keeping my eye on the chat. I can see anything you're saying on those platforms, and we'll do my best to address some of those questions all along the way. If you're watching the show later on our YouTube channel, by the way, just use the comments section there. We're planning an all mailbag episode on Friday. Markets will be closed for the 4th of July holiday here in the U.S., but a good day to do a Q&A mailbag kind of episode. So get your questions in now. Maybe we'll include them in Friday's episode. All right. Looking at the major equity averages, the S&P, and again, midday looked really good. We had a weaker open, right? So the S&P opened and got down to 74.50 very quickly. But then by about 11:30, it was all the way back up to 75.20 up for the day. All the major averages in the green looked pretty good. But then by the afternoon, just continued to rotate lower as the afternoon went on. So the S&P closing just above 74.83. So we're back below 7,500 going into the close, still above our line in the sand that we've been talking about. Really more of a choppy, sideways kind of doji candle kind of day. I saw someone mention that in the chat. I would generally agree. That's sort of where we ended up. That's a reversal candle. We'll talk about that when we get to the chart of the S&P. Elsewhere, the Dow ended up being actually flat for the day. It was up pretty big around lunchtime Eastern, but then gave all of the early morning gains away to finish flat for the day. The NASDAQ composite actually briefly went in the green, but finished more toward the lows, down about 0.2%. Nothing was immune from the pullback today in terms of the major averages, mid caps and small caps, all in the red as well. Dow Transport's the only index on the front page here, besides the TSX, that actually finished in the green. VIX also going higher. Now, the VIX was pretty choppy today as equities were down. They were up, they were down. By the end of the day, VIX was going higher, but not really anywhere near any sort of warning signs for us. VIX above 20 is always a challenging signal. VIX down around 16 and a half. Low volatility. Options markets telling you not much to worry about in terms of volatility at this particular moment. Elsewhere, rates generally moved higher. We've got some comments from the new Fed Chair Walsh, who talked about inflation being an issue, sort of suggested we're not going to be broadcasting our game plan very clearly. And I'm paraphrasing big time from the comments I heard and the summaries that I've reviewed. But I would say that. And so the market kind of pricing in some rate hikes here. And so 10-year treasury yield, long bond yield, all bouncing higher here. All of those have been coming in the last couple of weeks. So bit of a rotation higher. 10-year yield still below 4.5%, but getting closer to it. Long bond yield remains below 5%, but again, getting close to there as well. So bond prices generally went down today. The dollar index, one of the few things moving to the upside today, and that upturn in the dollar, keep an eye on that. One of our recent interviews on the podcast with John Kolovis, we talked about the stronger dollar as sort of a big red flag to look for. And since that conversation with John, the dollar's just been trending pretty consistently higher. As a quick note, thanks again, a number of you, for some great suggestions for the podcast. We're currently booking out guests in July and August, and welcome any other suggestions you have for good people to bring on the podcast. Had some really good ones in the last couple of days that we're chasing down. Just finished an interview with Carter Worth earlier today. That should be out for you. I've got 2 episodes with the editor getting worked up, and we'll hopefully have them ready for you very, very soon. Carter is a longtime CNBC contributor called CNBC's Chart Master. He runs his own firm called Worth Charting, and recently launched a Worth Charting ETF. I've known Carter for a number of years from when he used to visit us in our Fidelity days, and in my Fidelity days, when he was with Oppenheimer, Cornerstone Macro, a couple different places. But really good to talk to Carter. Carter's just a great kind of classic chartist, and it's really cool to talk to him about his process, some of his thoughts about how to find opportunity and manage risk. I think we're just really, really good. It's a very quotable discussion. So 2 really good interviews coming your way here very, very soon. So other ideas, please let me know. Others that you've heard on TV, that you've heard on other podcasts that you think would be fun for a convo. I'm all for it. Commodities, we're seeing a little bit of strength here this week with gold and silver. Gold did get up to around $4,100 an ounce. It rotated lower along with equity. So the relationship between stocks and gold pretty closely aligned today. Weaker open, strong midday, weaker afternoon. So that correlation appears to be much more positive than we've seen recently. Gold and silver both up today. Copper down, and the energy complex generally lower as well. Crude oil, in a lot of ways, in a bit of a free fall here, as conditions in the Middle East appear to be sort of stabilizing, as the Strait of Hormuz reopening in whatever that actually means in practice. I'm not sure, but I will tell you, investors are basically looking at lower crude oil prices, both crude U.S. and then Brent crude, both down today, as were natural gas prices. Soft commodities back up, corn and wheat both up over 2% today. Don't count those out. Cryptocurrencies all in the green here today. You've got Bitcoin up 3%, Ether about the same. Bitcoin's back above 60,000 as the equity session progressed. Still looking at that Bitcoin chart as a potential. I mean, if we start to rally from here, that chart of Bitcoin from the last couple months, I think will be in a textbook all right down the road about bullish momentum divergences. That will be one of the case studies if it works out as I think it might. Should be an interesting third quarter for sure. As we talked about on yesterday's show, a big 4-year cycle in Bitcoin kind of comes due in the fourth quarter, October, November timeframe. But for what it's worth, showing some divergences here right about now, and a nice short-term bounce since yesterday's close. All the top 10 coins tracked on stock charts in the green today. Looking at the 11 S&P sectors, communication services right at the top of the list. Meta was up as much as 10%. It wasn't as much. It wasn't up as much going into the close, but still pretty good. The XLC at the top of the leaderboard up 2.4%. That strength in Meta, certainly a big part of that one. Alphabet also potentially breaking out of a kind of a bull flag pattern, you'd probably call that. Certainly breaking above trendline resistance today, also a key move. So 2 biggest names having a bit of a breakout here today is helping. Financials number 2, and I've actually, as I was running my weekly scans for stocks making new 3-month highs, found a bunch of financials in there. Some of the money managers, charts like Schwab, which I think was the one that I grabbed to review with you in a little bit. Some of the insurance companies, I want to say, were on there as well. So could be interesting there as well. Some interesting breakouts. Then you got a big kind of gap down to consumer discretionary, number 3, up 0.7%. 7 out of the 11 sectors were in the green today, so pretty good in terms of sector performance. Tell you where it was not good was technology. The XLK was down 2.6%. Talk about a big switch from Monday and Tuesday, where tech is like right at the top of the leaderboard. Utilities second from the bottom, down 1.25%. Industrials down 1%. As well. Breadth-wise, pretty good breadth day. The breadth readings were all, colored neutral here on stock charts because it needs to be over 60% advancers to get into the bullish category. But I would say generally this is decent breadth today. 54% of the of the NYSE listings were up. Almost 60% of the S&P 500 members were up. Just about half of the small cap index, half of the mid cap index were up. So technically, a lot of these are kind of in the neutral category, but I would say certainly in the S&P 500 and the NASDAQ, more stocks higher than lower. In terms of the Morningstar style boxes, where we look at size and we look at style, large cap value, the only one that actually finished in the green, up about 1/3% today. So that's large cap value. The worst performer, mid cap growth. So you can see generally value better than growth today. Large over small is kind of the story today as well, with mid the worst performing out of this bucket of 3. But small over large has been the story for most of 2026 and certainly recently and so far this week. So today a bit of a switch as we have the first trading day in Q3 wrapped up with today as July 1st. All right, looking at Dave's Dirty Dozen, these 12 key names and ETFs tracking mega cap growth and related themes. Meta, of course, the big winner today. The news here, if you missed it, was Meta basically announcing they're getting into cloud computing. I guess not surprising, right? I mean, why not? And you've got AI infrastructure, you've got data infrastructure, might as well sell that capability to others. That's the logic that others like Amazon and Microsoft have been, and Alphabet have been leveraging for many, many years. So Meta kind of just getting into that. Where does that fit in? How does that compete? When would we be using Meta platforms for things when we wouldn't be using those others? Still an open question, but the stock jumping pretty good on that implication. It's so funny. I remember when the name Meta came out, it was all about the metaverse. That seems formally in the past, which is pretty interesting. Up 9% today on that news. It was up even more earlier in the day. Microsoft also up 3%. A lot of bounces higher in the software names, as we'll see as we look at some of the charts. Which were the names that were not doing particularly well? Micron, it turns out, can go down, right? We've got an example here today with Micron down over 10% today. Now, as as you'll see if you look at the chart of Micron is still pretty amazing. Even giving up 10% of its value today, it's still a pretty good long-term uptrend. But these pullbacks like this don't feel good if you get in at the wrong time. SpaceX also down 8% today after bouncing off of that opening day's range. Broadcom and NVIDIA, the two biggest names in that semiconductor group, still not really participating in the uptrend that we've seen in the SMH and in names like Micron and others sort of further up the supply chain, still in the semiconductor space. So for what it's worth, kind of software getting a bit of a bounce here today. All right, we're going to look at the heat map. Looks like we're streaming well on Facebook, LinkedIn, YouTube, and X. Thank you to all of you joining here live. Great to have you here with me as we look at the charts together. Please keep questions coming as we go. Tom Sosnoff, I did see, Tony, your email related to that one. That's on the list. Yeah, he's not a big chart guy. I'm not afraid to talk to people that are not chart people. I look at charts plenty. I talk to a lot of chart people. I've also had some really informing and eye-opening discussions with people that are not big fans of charts. As a matter of fact, some of the great conversations I've had thinking of my career have been with people who violently oppose the whole idea of it. But I mean, one would argue this is a great life lesson for politics and society in general. Sometimes you learn a lot about yourself and how you approach things by talking to someone that thinks something totally different, has a totally different life experience and set of tools. I don't think we should be afraid of that. I'm happy to to do it. One of my favorite books ever, to be honest with you, was a random walk down Wall Street, which literally the whole book was about why what I do professionally for my entire career should be absolutely useless. And while I disagree with a lot of the conclusions made in the book, I really respected the approach of how to explain what was happening with stocks. And it reinforced for me, why is it that some of the things that he points that he's making don't really click with how I think about things. And it really helped me solidify the importance of behavioral finance and investor psychology and behavior in my worldview as an investor. And you only learn that by challenging your thesis. So appreciate the suggestion. That's a great one. Lance Roberts, I see on there. I appreciate that one as well. We'll put that one on the list, and others keep them coming. All right. Okay, let's look at the market carpet. This is what happened today, and it was actually a pretty interesting day. Number one, look in the technology sector. We are used to the technology sector glowing green, and mainly from names like Intel, Applied Materials, Lam Research, KLAC, Micron, AMD, all being up big. All of those stocks that I just mentioned were down from 6 to 12+% just today. So this was a big give back day, and it got worse as the day progressed. But all those semiconductor names that have been having amazing uptrends all gave back some of those recent gains today. Now, is the chart of Micron a horrible chart? I mean, no. And I think that's what you have to remember. This is the chart of Micron. It touched its 21-day EMA today. After being down over 10% and closing at the lows of the day, it still hasn't broken that initial level of support. And that's the issue you have with the chart like Micron, is after this sort of run, this looks just like kind of a normal kind of average sort of trend in any sort of chart. But these price swings are huge. It's actually been gaining a ton in the second quarter. And now the first trading day of July, and we're gapping lower, about a 10% haircut. But a 10% haircut doesn't even touch our initial level of support, thinking of the general structure. Is there an issue with the chart of Micron in terms of the sustainability of the uptrend? Yeah, as we've talked about, the bearish momentum divergence, I think, is a real red flag. We've highlighted that with Micron and other names. Now we're looking to see if it breaks down through key support. And by my read, it hasn't quite done that yet, but certainly something we're going to continue to monitor. Having said that, the semiconductor trade that has been absolutely lights out, arguably the best trade in Q2 and one of the best trades in 2026, feeling some pain to start the new quarter. Other areas within technology, the storage names, Western Digital and Seagate, all coming off of their all-time highs that they achieved in June. Again, all of these charts are still making higher highs and higher lows. It's just these pullbacks are huge percentage swings just to achieve that higher low. When they stop making higher lows, that's where we really want to start to question the uptrend phase and whether it might be something different. But for now, all of those charts, I would say on the medium term and long term time frame, are still pretty stable. So what we also have to note in the technology sector, even though those stocks were down, plenty of stocks were actually up. Microsoft and other software names were some of the biggest gainers today. And some of these charts have been absolute train wrecks from a technical perspective. I'm looking at you, CRM and ServiceNow and all these other stocks that have just been in a free fall for so long. A lot of these are just bouncing off of their recent lows. AppLovin is one that maybe is one of the more constructive ones because it's potentially putting in a higher low as it breaks out. But none of these charts are remarkably strong right now. All of those ones, with the exception of Palo Alto Networks, which has been in an uptrend for the second quarter. But a lot of these software names that are up pretty good today are still pretty arguably negative charts. And I would say much more to prove until they look like anything other than a long-term distribution phase. But that mean reversion we've been looking for definitely happening today. Semiconductors, which have been strong, looking weak. Software, which has been very weak, looking strong. Not a big rotation yet, just an initial one-day sort of move. Other things that were up, I mean, look at the financial sector, right? So the technology sector ended up being one of the worst performers today just because of all the negative moves in some of those big red boxes. But financials were almost uniformly strong today. Communication services ended up being the best performer because of huge gains in Meta, and Netflix, but financials had much more of a broader advance, and it was spread around between banks like Bank of America and JP Morgan, like money management firms, asset managers, even the exchanges, which have been struggling, like ICE popping higher today, insurance companies, right? So if you go like AJG, that's AIG, sorry, AJG making a new 3-month high today. So interesting rotation across the board. We've been talking about financials and industrials as being ripe areas for stock picking, and with more and more improving charts. And a day like today reminds me financials are still very much an area of the market that I'm looking for opportunities and kind of finding one. I think I grabbed Schwab to look at, but there are a bunch like AJG. I don't think I grabbed that chart, but we're going to look at it now because it's my show and I control the mouse here. AJG is an interesting one. I mean, it's a really good bounce off of support, good resistance. We'd probably call this an inverted head and shoulders pattern, but it's not a great one. I will be honest with you. I would it passes a couple of the checks, but the one check it does not pass is the symmetry check. So one of the basic things you do when evaluating like a head and shoulders reversal pattern is if you cut the pattern in half and fold the piece of paper over, so those two sides line up pretty well. And here, absolutely not. You have a complex pattern on the left side, a very simple pattern on the right side. You've got a head and one shoulder, and then kind of two shoulders on the other side. Having said all of that, like the way that I would think, again, I think we get caught up in labels probably a little too often. For me, it's more thinking of this as like a range, right? So instead of saying this is a head and shoulders pattern, here's all the things, I'm just seeing resistance. I'm seeing resistance around 230. Here it's around 225. Here it's around 225. There it's 225. We finally got back up to that level and then broke above it. Like for me, that's the signal, right? The level of resistance, and we finally break above and power through to the upside. So today, AJG closing back above the 200-day moving average for the first time since July of last year. That's about a year ago was the last time it was above the 200-day moving average. So that would be the final kind of step to get through that resistance and open the door to maybe retest some of those previous highs earlier in the cycle. So I didn't grab AJG, but we ended up reviewing it anyways. Elsewhere on the heat map, I don't think much more I want to spend time on besides energy still weak. Defensive sectors like utilities and REITs not doing as well. Industrials kind of hit or miss today. Some of the defensive, and I mean more of like aerospace defense when I say that, like NOC, LMT, GD having pretty good days, but some of the big names like Caterpillar and Eaton, which have been pretty good charts, actually were down quite a bit today. So hit or miss in the industrial sector. That's how I would review. All right, we're going to continue on in a moment with some charts that I've hand selected to review with you fine folks. Before we do so, I do want to get a shout out, excuse me, to one of our partners, Seeking Alpha. They've been longtime supporters of Market Misbehavior. They are doing their summer sale right now. If you go to marketmisbehavior.com/SA bundle, you can get 25% off a new member bundle. This is where they combine premium, where you have access to their quant model, all their research, their portfolio level analysis, also combined with alpha picks. They actually just released their first alpha pick for July. It might have been actually their second one for June, now that I think about it, earlier this week. But they just put out a new name. So if you subscribe today, you'll get access to that one. Also, the previous alpha picks announced in Q2 and before. Go to marketmisbehavior.com/SA bundle. This is a time to get that sort of bundle where they're combining a couple different things at a pretty good rate, 25% off. And thanks again to my friends at Seeking Alpha for supporting Market Misbehavior. Here's the chart of the S&P 500. We mentioned in the earlier, someone mentioned like a doji candle for the S&P. I would agree. A doji candle is when it kind of looks like a cross on the chart. Open and close are almost identical. You have the high and the low sort of around that level. Generally speaking, that represents indecision. That basically usually suggests it's a reversal pattern. So if we've been trading higher going into the pattern, which we have been, suggests the next 1 to 3 bars more likely lower. So not a great candle to start the third quarter with. This is after, of course, the last couple trading days in June with a nice bounce higher, a rotation back to some of those leading semiconductor names today. All the semis down again. It was almost looked like people kind of got into those and then lightening back up rotating into other areas of the market as a repositioning at the beginning of Q3. That sort of repositioning potentially turning into a benchmark sideways for the day. So no real progress off of the open. Is the trend in the S&P still okay? It is. I will tell you though, having stared at this chart many times a day for many, many years, I will tell you what I'm starting to see here. Enough that I'm just going to draw it on here so I don't forget that I do. I mean, this almost just looks like a classic symmetrical triangle pattern. Symmetrical triangle pattern, pretty classic part of the technical toolkit. This is where you have a move in either direction, then it settles into this narrowing of the range. What's weird about this pattern, it would be more classic if this high was kind of up here and then we kind of settled in. This kind of weird secondary highs throwing me off, but there's definitely a consolidation happening. We've seen that from the neutral momentum. We've seen that from the flat moving averages, looking at the 21-day EMA. This is going to break one way or another, potentially as early as tomorrow. We break above the upper trend line or below the lower trend line, and whichever way we break could be a really important sign about what's to come next. So breaking out of this pattern, RSI breaking above 60 would be bullish. RSI breaking below 40 would be bearish. At this point, the benchmarks are sideways, and I think the chart of the S&P, certainly on that tactical time frame, about as neutral as I could imagine. S&P is waiting. We're waiting to see which way we go next. That's the daily chart of the S&P with neutral price, neutral momentum until further notice. But one of the things I noticed as I was going through my main chart list this morning during my morning coffee routine is that some of the breadth data continues to strengthen. We saw the breadth was pretty good today, even though the benchmarks were down a bit. The S&P's bullish percent index broke above its high from June. So compare these two charts, right? Here's the S&P with that kind of coil pattern that we just highlighted on the previous chart. Look at the bullish percent index breaking out today. So what is this top series? The bullish percent index. This is a breadth indicator based on point and figure charts. Basically, out of the 500-ish names in the S&P, how many are in a bullish point and figure construct? And just over 60% are bullish. And so that number's actually been steadily increasing, even though the S&P is the same level that it was in mid-May. In mid-May, we were around 47% of S&P names, 50% above in a bullish configuration. Now it's over 60%. So while the S&P's been choppy, sloppy sideways, about 10% of the S&P names have generated a buy signal on their point and figure chart. That's one way to think about that. So the breadth is improving, which tells us we should be pretty optimistic about stocks right about now. The opposite, when the S&P is going up and breadth isn't supporting it, that's when we have a warning sign. This is actually pretty encouraging. The VIX, let's see. So the VIX is going lower again today. I mean, honestly, it's sort of an inside day relative to where we were yesterday, but no real bounce in volatility. So even though the S&P and the NASDAQ kind of rotated lower, there wasn't this big spike in the VIX, right? The warning sign would be like this pattern that we saw in the beginning of July. Some of these moves that we saw like in February of this year, a VIX spiking higher and pushing above 20. We're not really getting that right now. We're actually seeing volatility lessen. And so the options market's telling us not a lot of, kind of a low risk environment and a time to be pretty comfortable with the uptrend phase. Spike in the VIX would be a warning sign. We're not seeing that. I did want to share this indicator. This is the SKEW Index. One of my premium members this morning asked about the SKEW, and I just wanted to relate those two charts because it's not an indicator that I talk about too often. And honestly, why do I not look at this indicator more often? There's only so many things you can focus on in one trading day, I think, and have any sort of legitimate outlook and not have it just be clouded by too many indicators. So at some point, you have to start eliminating things that are interesting, but there's not a core part of your process. And that's where I put the SKEW Index. I kind of bucket it with things like the put-call ratios and others that I refer to randomly and occasionally, but not regularly. But here's what the SKEW Index is, right? If the VIX is talking to us about kind of the implied volatility based on where options are trading, think of the SKEW as insurance, right? What insurance are options investors using to protect from downside risk? This is a tail risk indicator. The SKEW basically looks for what sort of bets are being made to protect against a big downside move. So the idea is if the SKEW Index starts to spike, that's where we want to start to get concerned about potential downside rotation in equities, because that tells you options investors are positioning themselves to protect from a big downside move. So the last time we saw the skew really start to push higher was at the end of 2024, beginning of 2025. That was before you had that big rotation lower. So looking back, that was actually a pretty good indication that things were getting uncomfortable, and particularly that options investors were positioning for that potential outcome. When the SKEW index is very low, that should be more of an encouraging sign, because investors are not betting a lot on downside protection. They're probably pretty comfortable. Now, the problem is the skew has remained fairly elevated for the last 3 years, right? Going back to summer of 2023, 3 years ago, the skew has spent a lot of its time kind of in this 130 to 160 range. It's pushing above 160. Breaking out of this is what we saw at the end of 2024 would be a warning sign for me. At this point, it's spiking higher this week, but let's see if it gets further and it makes a new high for the year. That's where I would start to be a bit concerned. For now, something we'll keep an eye on, but not urgent yet is the way I would think of it. All right, let's talk about some individual names, and we'll take a question or two. We'll call it an evening, and we will go prepare for the U.S. soccer team, hopefully with a dramatic victory over Bosnia Herzegovina. And a shout out to those guys. I've been to Sarajevo. It's been a number of years. I attended a conference there years ago. It's a fascinating place with some wonderful people and some really surprisingly good food that we enjoyed very much. So it breaks my heart that we have to compete against each other, but I hope the U.S. wins tonight. All right. Here's the chart of Alphabet. Alphabet and Apple, both, you can draw a trend line off the recent highs here in May and June. Alphabet today closing above that trend line. We highlighted this on the show yesterday. It's above the 21-day EMA, back above trend line resistance, which I think is an interesting breakout. The momentum is not quite bullish enough that I would say this is a clear breakout kind of name. Let's clear the 50-day. Let's get RSI above 60 to really complete that rotation. But an encouraging initial sign, finally closing above that trend line. And we should note, tomorrow we need to see follow through. That's an important check for Thursday's session. Alphabet, we're labeling this as a bull flag pattern today. We closed above that trend line, closed above the 50-day. Again, follow through day tomorrow would be crucial. RSI getting above 60 on this rally would be meaningful as well. Here's the chart of Meta. I mean, honestly, still not a good chart, I would say. At best, it's a neutral chart. We are back above the 50-day moving average. That's great. We have been unable to get above the 200-day for months and months and months. As a matter of fact, we've had a number of failed attempts to get above the 200-day moving average. One colossally gapping a higher above the 200-day in late January. Here, closing above in one day in April before rotating back below there. We need to get above that 640, 650 level on Meta to complete that rotation. Having said that, pretty good bounce here. After you have a gap like this, let's see what happens post-gap, and if we see additional buyers come in that could provide that upside momentum. I mentioned all the green on the heat map for financials. I mentioned looking for stocks making new 3-month highs and finding a bunch of names in the financial sector. Schwab is one that comes to mind here, closing today above its 200-day moving average. We've been kind of hugging the 200-day for the last 6 months. We've had a number of attempts to get above there and all have failed. Is this the time that is different? What's encouraging here for me is the stronger momentum. If the RSI can get above 60, maybe push up to that overbought region, that could be a really good sign of enough upward momentum to follow through there. Schwab is just one of the charts that I think are pretty interesting in the financial sector. Another one that came up on my scan for new 3-month highs, IQV, which is a healthcare provider name, making a new 3-month high, also closing above the 200-day. RSI finally pushing well above 60. And so, break above the 200-day with RSI pushing up to 70 is often the beginning of a much broader advance, a much longer term advance, which is why I'm kind of keeping an eye on that one. Final chart here, CDW, another one making a new swing high, getting above the 200-day moving average. CDW is in the technology sector. What's interesting here is February, April, June, all testing the 140, 142 level. That's where we've stalled out a bunch of times. We can get above that level, just a little bit above current levels. That all of a sudden could be the beginning of a nice recovery. By the way, CDW, one of the 3 places I actually interviewed at right out of school, CDW, National City, and Bloomberg. And I ended up taking the job at Bloomberg in New York, but interviewed at CDW based outside of Chicago. So always has a special meaning for me, but overall chart may be starting to look a little more positive. All right, let's take some questions here, and then we will finish it off. Larry, thanks for watching as always, and being a part of the show. The 5-day moving average of the equity-only put-call ratio is up to 68 today, getting in a bullish area when getting this high. Yeah, let's take a look at that. I did not include that in the show today, but always interesting to look at what we call options data, positioning data. I kind of think of this, right? So the put call ratios, and as you implied, I usually look at a 5-day average of the put call ratios in pink, just to smooth out some of the data. And I'm guessing if you're talking about 68, you're talking about this right here. Now, keep in mind, this is, I think this should be updated for today's close. This was yesterday because we had the big spike higher on Monday. Tuesday, we had the big pullback. Today, we're pushing higher. So the 5-day moving average, I see your point, it's kind of getting higher and higher. It's getting up to some of the highest levels that we've seen. Generally, super high put call ratio, usually bullish for stocks, right? So something to keep an eye on. Thanks for highlighting that. And it's been a choppy, noisy series. It always is, but especially here recently. At K Vandy 4030, does the breadth seem odd? No, I would say maybe counterintuitive is I guess what your question's implying. Is it weird that the breadth is kind of moving against the market, right? So the benchmarks are down, but the breadth is generally more positive. Like, no, because what's happening is when technology's down, it's such a huge weight in the S&P and the NASDAQ that one sector can kind of drag everything down along with it. So even though Meta was up huge, that can't counterweight enough all the semiconductors that were down so much, right? So, the S&P and the NASDAQ being down today was really more of a technology story. If you look, some sectors were up fine. Most of the S&P sectors were actually up today. So the breadth is positive. Most sectors were up. It's just one really important, really big sector was down a lot, and that's going to counterbalance that. So I think counterintuitive if you think that breadth and the index level values are the same. This is one where we're actually going to get a contrarian move, because if technology is strong and everything else is down, breadth's going to be negative, indexes are going to be up. Today we saw the opposite, where breadth was good, tech was down, benchmarks are down. So I think in the short term, that's going to be more the rule and not the exception, just given the concentrated benchmark and the overweight in technology, essentially. The one other comment here, and thanks so much for watching live. You had said, I just commented on that pattern. So when we were talking about the S&P, I called it a pennant. I may have used the wrong name. So to be honest with you, there are people that are kind of purists about that sort of thing and probably have really strong opinions as to whether you call something a pennant or a symmetrical triangle or a coil pattern. I don't worry too much about them, but here's what I'll tell you. Generally speaking, and this is more of the subjective way of thinking about it, a symmetrical triangle or coil pattern should be a pretty dominant pattern on the time frame that you're looking at. So if it's a daily chart, it should take up a pretty good chunk of real estate on the chart. A pennant pattern would be a much smaller correct move, right? So like a little like this. So like this isn't a great pattern, but like a little mini pattern here of lower highs and lower lows. I would probably label that a pennant. And I would call this a coil pattern or symmetrical triangle, just because it's a much bigger pattern that takes weeks and weeks to form, as opposed to just like a couple days to a week. That is my shorthand for saying that. How much does it matter if you label it a pennant or a triangle pattern? Like, I think it means absolutely minimal amounts, because to be honest with you, the analysis is very similar. It's all about identifying that consolidation, defining the framework, and then looking for, the signal, the trigger that confirms that pattern. And whether you call it a pennant or a coil pattern, breaking above the upper boundary is the trigger that it's probably going to go higher. So I think that might be the way that I would think about it. So I'd worry less. So I think those names, at a lot of times, there's a gray area. Just generally, if it's a shorter term pattern, you want to call it a pennant. If it's a longer term pattern, you want to call it a triangle or coil pattern. You cannot call it a pizza pattern. That is bad technical analysis, although it is pizza night in the Keller household for the U.S. soccer game. So I wish you a pizza-filled and hopefully US win-filled evening. Thank you so much for watching. Happy Canada Day to all my Canadian friends. Have a wonderful evening. And remember, it is always a good time to own good charts. Take good care, folks.